Why would you care about this video? Well, I'm running a stocks and investing portfolio funded with real cash to build up a track record over time. And I have a ton of use cases for this track record in my personal life. So what I'm trying to say is I'm putting a lot of effort and a lot of brain power into this portfolio. And now through these video updates, of which this is already the third episode, I am sharing all my long-term investments in a very transparent manner here on YouTube for free. And let me tell you, during the last 2 weeks, I bought a new very interesting value investment, a holding company, which is at least 70% cheaper on the stock market than all of its investment assets combined. All that is to say, you do not want to miss this update. A bit of context. So back when this portfolio started exactly 1 month ago, I started off with a €7,500 cash deposit. During the last update just 2 weeks ago, this portfolio is worth €7,100 and it held these stocks at these amounts. So if you want to hear all about my reasoning and thought process, I highly recommend checking out the first 2 parts of this series. Most importantly, however, I told you guys I want to deploy the cash that was in this portfolio, roughly 50% at that time, in a disciplined manner over time whenever I saw value on the stock market. So now that I actually deploy this capital in a disciplined manner over the last 2 weeks, well, let's take a look at the stocks I bought. And really there were just 2 additions between the last update and this one. First up, we bought another 100 shares of UWMC, which is of course the #1 mortgage originator in the US that we discussed last week. And while the mortgage industry as a whole is experiencing a lot of pain, I do believe this bad boy is positioned to rise out of the ashes better and stronger than ever whenever the next economic cycle begins. But for now, the stock is getting slaughtered, which is a good thing as a value investor. A lower price means less risk and also a potentially higher return. Since the last update, the stock is down another 5%, and since the start of this series, the stock is down a whopping 25%. I liked this stock during the first episode, I liked it even better during the second, and I love it today. I believe this stock is giving me a tremendous value proposition. Just as a quick reference, if you were to buy today, if the dividend were to remain stable, you would be getting an 11 to 12% dividend on your current investment. That is insane. And in this portfolio, I was able to get my cost basis down to just $4 per share, which means that I'm getting a 10% dividend yield on my investment in UWMC. Moreover, if the stock continues to go down, I would just buy more. It is as simple as that. Now it is time for my second purchase during the last 2 weeks. I bought 25 shares of this stock, Porsche Automobil Holding SE, which is down about 50% over the last 1.5 years. And while this company holds the name Porsche, this is not the same company that sells those fancy cars that we all love. Let me explain. You see, this Porsche SE, is actually an investment/holding company, not just any holding company. They hold a 53.3% stake in the entire Volkswagen Group, and they have an additional 25% stake in Porsche AG, which is the Porsche car manufacturer. The construction of this holding corporation is pretty darn complex, so I would love to make a separate video where I go in depth into how this holding corporation works and why it is such a good investment opportunity. So let me know if that interests you. But most important of all, I calculated that both of these holdings are worth roughly 60 billion euros combined. And that figure is important because the entire Porsche SE holding corporation is worth just $16 billion on the stock market. And that means that you're getting roughly a 70% discount on the assets that this company owns. Let me state it differently. For every €1 I invest in Porsche SE, I effectively get almost €2.5 in Volkswagen stock and an additional €1.5 in Porsche AG stock. So effectively, I'm getting roughly €4 worth of German car manufacturers by paying just €1 for Porsche SE stock. That seems like a tremendous deal, right? Well, I believe it is. Hence why Porsche SE makes up roughly 14% of this portfolio, and hence why I'll most likely buy more of this company over time. So those were the two buys over the last 2 weeks. First, an extra 100 shares of UWMC for roughly $3.35 per share. Second, a new position of 25 shares of Porsche SE for 53 euros per share. Now with that out of the way, let me show you the current portfolio. Okay, so we'll run through the current holdings quickly as a summary before we go into comparing my performance against the S&P 500 and compared to holding just cash. ASO or Academy Sports and Outdoors, I hold about 15 shares or 7.5% of the portfolio. I am basically flat on this position. I want to buy more, but the company hasn't dipped enough. BNP Paribas, I hold 5 shares or about 3% of this portfolio. I am up about 8% on this position, but honestly, I just really wish that this company either decided to moon or to crash significantly. Where the company is currently trading at isn't really fun in my opinion. UWMC or the mortgage business, 700 shares or roughly 25% of the portfolio. I have lost about 11% thus far, which is fine in my opinion because I'll continue buying the stock. Google, 10 shares or about 8.5% of this portfolio. I really wish the stock went down further, but for now we're just at minus 5%. ASTS, 200 shares or about 9% of this portfolio, and we are up about 15% on the short term. This position is part of a medium term swing trade and I hope to have sold a bit before the next update, but we will see. And lastly, that Porsche SE position at 25 shares or roughly 14% of this portfolio, and we are basically flat. Oh, and of course, before I forget, we of course have our cash position at 35% of this portfolio or about 3,500 euros. I believe this to be plenty of dry powder for the next couple of weeks, at least until the next deposit hits somewhere in February. Okay, cool. Those were the current holdings and I'll share my wish list and my current buy orders outstanding in just a bit. But first we have to compare ourselves against the S&P 500. Here we can see the current value of my portfolio, and this is what we would have had if we had DCA'd or dollar cost averaged into the S&P 500 instead. As you can see, we are overperforming the S&P 500 by about 2.5%. But of course, if we compare our performance against cash, we are actually underperforming about 2%. So at this moment in time, this portfolio is overperforming the S&P 500 by about 2% or 200 euros, and it's underperforming cash by about 2% or about 200 euros. In essence, to value invest is to be a contrarian. And to be a contrarian on the stock market means to swing wildly between over and underperforming on the short term. However, since value investors focus on buying things with actual real value, those swings between over and underperforming should even out into a pretty nice return over the long term. So in these portfolio update videos, we'll keep comparing our performance against the S&P 500. For fun, mostly. Now, as promised, here's a screenshot of my personal wish list, and here's a screenshot of the limit orders I currently have outstanding. And with those two out of the way, let me know what you want to see during the next portfolio update in just 2 weeks time. Now time for the classic YouTuber disclaimer. While I am a registered financial advisor in the Netherlands, I do not have the legal capacity yet to give anyone investment advice. Therefore, this video and any other video on this YouTube channel can never be taken as financial advice. I cannot be held liable for the losses that you make while trading according to my opinions. Please do your own due diligence, blah blah blah, you know the drill. And with that said, thank you so much for watching. I love you all, peace.